Hi everyone, today we're going to look at how to handle inventory part returns to vendors in QuickBooks when the vendor does not pay you for any of the shipping cost your company incurred. In our example, we're going to assume we buy an inventory part for $1,500 that has a $30 shipping fee. That's going to be a freight in fee for a total inventory cost of this part of $1,530. Now the normal process in inventory parts is you would do a purchase order, which is non-posting, but we want to make sure that we keep good track of our inventory. And as you know, purchase orders does not prevent you from going into negative inventory, meaning let's say you have a 0 on hand, but you have 2 on order. You don't want to do an invoice at that point before you receive this item in, because you'll go into negative inventory, and that's a nightmare in QuickBooks. You'd have to use a sales order in that example because it is an inventory part, and there's a separate video on sales orders, and you cannot do sales orders in QuickBooks Pro, so you'll have to go with Premier Accountant Enterprise. But anyway, that's a little off topic, but kind of related. So let's assume that you're doing everything right. You do your purchase order, you receive your items with or without a bill, you enter the bill, and you pay the bill. So let's look at the bill. Here's our bill. From Patent Hardware Supplies, we bought 5 light pine cabinets at $1,530 a piece. That's a cost of $1,500 each plus a $30 freight in charge, for a total inventoried cost of $1,530 each. As QuickBooks users know, it is not a solution for advanced inventory or manufacturing solutions. So unfortunately, there's no way to really break these two out. You have to put them in together on the bill so that all the proper costs are inventoried. So your cost of goods sold for this particular part is $1,530. Okay, let's say you got 5 of them in and one of them is damaged and you have to return it. Let's go through those steps. You would go to vendors, go to enter bills, go to credit, right? Find the vendor. In this it's already highlighted, but normally you'd go to the drop down, you'd find the vendor, you would put in the item. There it is. Brings up the $1,530. And return damaged part. All right, so now when I hit save and close on this, what does QuickBooks do? What QuickBooks does is it's going to give you a vendor credit, and here's the journal entries it does. It will go ahead and debit AP. As you know, AP is a liability account, appears on the balance sheet. It is usually a credit account to increase the AP account. But in this case, we're going to decrease the AP because you've returned the part. So it's going to decrease that AP by the $1,530, and it is going to credit inventory or remove that part from inventory, which is an asset account on your balance sheet, for the same $1,530. However, the vendor's not paying you for that $30 that you paid the freight in to get the part in the first place. What do we do with that $30? We're going to go ahead and expense it to a cost of goods sold damaged inventory account, or if you have a net inventory account because you make adjustments throughout the year, but you need to expense the $30, and we're going to do a journal entry. Let's go ahead, go into company, journal entry, and we're going to go ahead and debit cost of goods sold. That's like maybe the 50. There we go. I've created an account there, and we're going to debit. It's an expense account which you debit, and then we're going to credit that AP. Okay, accounts payable. I think that's 20,000. There we go. And then you can write a memo on reimbursed shipping for returning damaged inventory part. Okay, and then the name, if you want to put the vendor name, was patent, right? Okay, we put that there, hit save and close. And so now if we look at our vendor balance detail, you see that the 1530 has, that credit, the negative is a credit, has been offset, and so you're owed $1,500 back on this particular transaction. But the pain doesn't stop there. We have to pay $30 to ship this part back to the vendor. So we're going to go and enter a bill, which I've done. And it's going to be to FedEx to ship this part back. And you will expense that again to a damaged inventory. So when all is said and done, what you've done is you paid $60 out of your own pocket for your vendor's mistake. Unfortunately, that's why you want to get your vendor to pay for the shipping costs. Thank you.